Hey everyone, today I would like to discuss why I think all Malaysians should invest overseas. Let's talk about what I mean by investing overseas. I'm referring to investing your money beyond Malaysian denominated assets to include opportunities such as US stocks, China stocks, Singapore stocks, and even cryptocurrencies. Reason number one, depreciation of Malaysian Ringgit. I'm pretty sure you guys have read the news that Malaysian Ringgit has already fallen to its lowest level in 26 years, trading at around 4.8 Malaysian Ringgit to 1 US dollar and 3.57 Ringgit into 1 Singapore dollar. This phenomenon has already eroded the purchasing power for all Malaysians even further over decades. For example, year to date, Malaysian Ringgit has already depreciated 4% year to date. Even if EPF, which our employee provident fund, which all of us have if we work a full-time job, announces a 6% dividend, we actually only gaining 2% this far. And this 2% actually excludes the day-to-day inflation. So we must be thinking, we need to think that, are we really gaining here? Reason number two is over-allocation in Malaysian Ringgit denominated assets. What do I mean by this? According to a research done by Khazanah, Malaysia has a home ownership of 72.5%. This means that most Malaysians have their wealth tied up in a property which is illiquid and itself is denominated in Malaysian Ringgit. Additionally, many Malaysians rely heavily on their EPF for their retirement, and it could be the largest or not the second largest allocation of a typical Malaysian net worth. While EPF is a reliable source of savings and investments with a great track record of returns around 5 to 6% over a decade, it is still denominated in a depreciating Malaysian Ringgit. So what is the solution right here, right? The solution is very simple: investing overseas. US stocks like Amazon, Apple have already delivered impressive returns over the years. For example, S&P 500, which tracks the top 500 stocks in US economy, has given 81.5% returns over 5 years. And this represents a 13% CAGR, which is a compounded annual growth rate returns. Being a Malaysian has its own benefits. Right, we already know that Malaysian Ringgit will always depreciate against the greenback, which is the United States dollar, USD. Right, so over the same period, the USD has actually strengthened 16.95%, which actually represents a 3.18% CAGR over this time. This means by investing in the US stock market, you are actually able to earn from capital gain, forex gain, which is around 16.18% CAGR, which actually outperforms Malaysian equities and actually EPF returns. Another example that I would like to share is actually the India's growth story, right? In 5 years, Nifty 50, which is a benchmark that tracks the top 50 stocks in India, has actually grown with a CAGR of 15.38%. And this has actually outperformed many of the blue chips and even our own Bursa KLCI index. In conclusion, while it's really important as a Malaysian to support the Malaysian economy, it's actually very important for us individuals to invest globally to get outsized returns. That's all for today. Thank you for watching and see you next time.